Hey, I am David for BigBits, and in this video stream, we are going to be looking at the technicals for Bitcoin, Ethereum, Doge, and some others. Should be pretty interesting here. The markets are crashing. That's not good. Never a good thing. It's not fun to watch your account value go down, in a sense, but I wanted to finally get back around to getting onto the live stream and going over CPA with everybody. It's been a while, and I've plenty of new subscribers since I've done my last live video. If you've been watching my most recent ones, you'll know that I have been very busy with school as an instructor. I have 3 new courses coming up for the summer semester, so I'm going to be very busy again, so no summer project like we've been doing the last couple of years here, but we are going to talk about Bitcoin mostly, and then also Ethereum, Doge, and some other coins. We'll take a look at the altcoin dominance and see exactly why things are kind of playing out the way they are, in my opinion at least, and then see where we think things are going to bounce. And I'm going to go ahead and let you in on a secret. I think we bounce here. And I tweeted this, and if you haven't been following me on Twitter, please go back and do that. You will see that I've been fairly accurate for the most part. It's been it's always like nearly impossible to call the tops in these markets, but I think my first tweet on the most recent breakdown area was back here when we went to retest the former supports on this channel and got denied. I think that's about the time I went out and said I think this is going to be the extended dip on Bitcoin. We hadn't had a long dip that had lasted for more than a couple of weeks since the bull run started. That's about where I thought we were excuse me. And that's about where I thought we were going to start seeing these issues crop up. Once we came back up above these moving averages, though, I started getting pretty bullish again, especially right around here. I was a little concerned that we weren't going to cool off any, particularly with the way that Ethereum and all the altcoins were doing. But if you've been around crypto for a while, you're going to know that once those sorts of coins, Shiba, random turds, once those start really shining, and you know that's usually about the end of that little bit of euphoric stage. And it seemed very likely we were going to drop after that point. Elon, of course, did not help. But if there is a point in which we are going to stop dropping, I do believe it is around 40,000, which is our 200-day moving average. Now, I did mention, I believe in my tweet, I thought I said 40K, but yeah, that's about it. And I'll show you why I'm eyeing this area for a couple of reasons. Number one, our 200-day moving average is something that's pretty critical when you're looking at moving averages as support. 200-day is pretty important. Let's zoom back out here. You can still see that we have not touched the 200-day moving average in a long time. It's been more than 200 days, that's for sure. Go back. The last time we were near the 200-day moving average was in May of 2020. So pretty much a full year. That's hard to believe. It's almost been a full year since we've even came back down to the 200-day moving average. We crossed it up at the end of April, right before May started. So it has been more than a year since we traded below the 200-day moving average on Bitcoin. It is crazy impressive that it was able to do that for so long. And just kind of going back for those of you all who weren't around, getting to see how some of these things kind of worked out in the past. Let's look at this little mini parabolic run up we had back in 2019 after the major crash from the bear market. It was a very bullish cycle. Everyone was really happy. We knew it was moving too soon. Of course, nobody knows when the tops are going to hit, but we knew it was moving too soon. We knew it was parabolic, and we knew it was going to come down. But you'll see when it approached the 200-day moving average here, it approached it with quite a bit of velocity. And this, honestly, might be kind of something we see here as well. But I don't really think we're going to go sideways for nearly as long as we did there. But one thing you'll want to note, though, is that the only reason we really had this period in through here, this sort of 2-month period, was because of the coronavirus. You could potentially assume that we would have went sideways a lot longer and not dropped down there had we not dealt with that. So it kind of skews the moving averages in this area just a little bit because that was a huge event. But it did happen, and it's part of the price action now, so you got to account for it when you're looking back at the prices in the chart history. So now that that's in there, it did do completely fine there, though, because we did still hold up pretty well on the weekly. And again, let's go ahead. Well, before I do that, I did want to take a little bit closer look at my indicators here. You can see those. This is my custom indicator, the Stochastic Weights Advanced. It takes a bunch of different stochastic style indicators into Advanced with some custom weighting that I've applied to it. Momentum is still down, but it is very low considering that we are in the bull market still. I would not consider the bubble popped yet. Bubble will not be considered pop until we drop something greater than probably 40 or 50% within just a matter of days. Now, could that still happen? Of course, but I do think there is a lot of interest right around 40,000. Now, I've mentioned the moving average here. I'm going to go zoom out into the weekly as well. But the other key thing about this area is that 38,000, I remember this price because it's very important when you're looking back at the crypto price history and historic fundamental moments. 38,000 is around the area where Elon announced that Tesla had purchased Bitcoin. Now, I haven't been keeping up with the tweets today. I know he kind of insinuated that they had sold off all of their Bitcoin, but I think today they walked it back. Again, I've not really kept up with the news too much. I just kind of seen some stuff on the side of my timelines today kind of mentioning he walked that back. But I had been looking at 38,000 for a while, ever since I expected a potential dip. And I've been kind of targeting that ever since around this area. I had no idea we were going to continue to run in this bull market as long as we did. It's been very impressive, very, very bullish. I think it just took too long for the alts to catch up, and there will be another alt season. There will be another bullish cycle for Bitcoin. We're still early in on this cycle. I think a lot of us thought that things were getting ahead of itself and that around September or October might be the peak. But if we take a month or two off here, maybe three or 4 months off, you can see as long as we stay near these relative highs for 3 to 4 months, kind of moving a little bit more sideways, gives time for the market to catch back up, we could see that second wave. And I'll show you a bit more about what I'm expecting here on the weekly. Zoom back out. Weekly, this doesn't look good at all because we are trading under the weekly mid Bollinger Band. But if you followed me on Twitter, you'll know that the mid Bollinger Band we are actually concerned about on the weekly is the 21-week EMA. Don't ask me why, but when it comes to trading, when you're looking at other indicators and comparing, it is sort of this herd mentality that things are true because people believe they're true. That's self-fulfilling prophecy. And the meme is just kind of, it's the 21-week EMA that you've got to watch out for. And it did. It held. The 21-week EMA held. Now, if you'd followed me on Twitter, you would have seen that I posted that I think that we can get a very big bounce this week. And I was very confident. And I don't know if I really worded this that well on Twitter, is that I thought we were going to continue dropping in prices. And I think we're going down to that 200-day moving average. I do not think there is a way in any world in which we would come down to the 50-week moving average just yet. Okay, because that would put us at new lows from the previous big correction that we had back here. Coming down to our highs here, or in this range, having a big wick all the way down to 39,000 at the previous highs on these candles, completely reasonable. I'll zoom in there so you can see that a little bit better. That is kind of what I'm expecting. We get a big wick down here, and we could potentially even close the week green. I know it seems kind of hard to believe, but I really do think it is possible. And even if we do have a red week, I'm not too sold on it continuing to crash. Of course, Nobody knows. So even though I'm fairly confident in how I feel about this, and other people are probably going to say similar things, it's impossible to say. So that's why always everybody says not financial advice. Clearly isn't. Um, let's see. One of the things that I am actually kind of excited about is that the stochastic advanced indicator here has went pretty much sideways and kind of bled downwards with minimal pain. I should say there's very minimal pain on the actual chart itself, despite our indicator, our oscillators resetting. If you followed me for a while, you know that's something that I talk about quite a bit, especially on smaller time frames, is when your oscillators kind of tend to go towards 50 as their middle point, and they kind of hover around there until the market decides to make the next decision on where the price is going to go. And this is pretty common, and the fact that we've had very little decay in the price has been very good. And you can see that this chart just looks almost symmetrical up here at the top. It was screaming that we were probably at a top, at least temporarily. All right, so again, we have not touched the 50-week moving average since sometime back in June of 2020. We are just now coming back down to some of the key major averages. I don't think we're going to come back down to the 50-week just yet. I'm not going to entirely rule it out, but I really don't think that is going to happen. The 50-week is way down there. Not something I'm expecting. And if it does, I will try to find a loan and take out some money and buy some Bitcoin. I don't think that 30K is a price we're going to get, at least not anytime soon. All right, let's switch to the BLX chart, which has a little bit more price history, and I can go back and I can show you exactly why people are kind of worried, or maybe not worried, but why they kind of watch the 21-week EMA. I was just talking about this a moment ago, how it kind of held as support here on the weekly chart. Keep in mind, BLX only updates once a day, so it doesn't have the current price in here included. Go back to the 2017 bull run. Do this, that way we can kind of see that a little bit better. My head isn't in the way. There we go. So even when the market reached its top in December of 2017, and we had the huge correction in price the next month, we didn't even touch the 21-week EMA. That's why I think we are not at the market top, because we were so far above that moving average on this parabolic run up that even dropping nearly 50% in 1 week wasn't enough to even touch that moving average. So if we want to compare the market to the way it was before, look at this. We dropped down here and bounced off the 21-week EMA. Dropped down here, bounced off the 21-week EMA. And you'll notice the price can trade above or below it, close above or below it, and that's completely fine. And we have another one here and another one here. There's a lot of action around that 21-week EMA, and if this bullish cycle is going to continue, kind of what you expect to continue to see here. It's always been very important. You can see just continuing to go back in through here, there is a little bit more price action even where it hovers above it once it got above it from that bear market. This is the previous bear market back in 2014, 2015. And see, once we got above that 21 week, it just kind of stayed above it. And one of the important candles you'll notice is this one, where the price went way below and even came down close to the 50 week, which is what I was just talking about. Came down close to that 50 week, but it bounced back pretty quickly and never had a significant close below that price. So again, that is why we are watching the 21-week EMA and why it is so important. And I'm going to switch back to Coinbase here, where I have all my other drawings. But you know, this doesn't look like some of the other things that we've seen as far as the support with the 21-week EMA. That's why I'm saying if this plays out like it has in the past, we get that big red wick all the way down here to our previous highs or the support area, and then we get it bounced back up, and it can close within some sort of margin of error, a couple percent, and it'd still be fine to continue to bounce. I think we're looking really good so far with this particular market. Completely fine for now. All right. I did want to take a look at the monthly first, just because there is some important stuff to look at. Indicators here. We are very overbought. There are some very bearish signals here, and this is why I'm not 100% confident that we are going to bounce right here and we are going to continue to rise in price. These monthly candles are very concerning. We still have 2 weeks left, and again, if we get that huge wick, it might not matter, but we are very overbought, and we have been for a couple of months, and this would maybe even be the third month in a row. So a correction from these values on the oscillator is not impossible. In fact, pretty common. But one thing I will note that is, even if we do have this correction, typically what we see on oscillators, particularly with the RSI, my advanced oscillator with the weighting, is that we have these sort of extended periods with a double peak. We haven't had a double peak. We've just had one solid extended peak, and then it came back down. So what we're looking for on the monthly chart, and why I think the cycle might run back again until December now, instead of finishing early in the year, that we want to see a double peak on the monthly chart. And right now, we only have one. I think we'll see a double peak, and that will be the top of the market. So again, I know this has kind of changed, but that's how trading should be. You should be changing. You'll notice we didn't have a whole lot of double red candles on the monthly chart back in 2016, 2017, and let alone we didn't have any that were this overbought already on the indicators themselves. So at this point, when we were overbought before, it was around November of 2017 when things were this overbought on the monthly chart. But again, like I said, we had that double peak, and it's very common to see double peaks on these particular tops that we're looking for. Okay, we've went over Bitcoin enough. I don't really have a huge price prediction, although most people are targeting upwards of what I think the extension on the stock to flow compared to previous cycles was up to $280,000. I am not nearly that aggressive. I've always been more conservative. I'm going to hope for 180,000 as my aggressive target. Anything north of 90,000, I'd be willing to start selling a little bit of my crypto, honestly. That's when I start to DCA out. Go back to Ethereum USD. And I say that because I've been in for a long time. Since the early part of 2017, I've been in. I'm fine to DCA out slowly at these prices. Now, if you're getting into the market quickly to get out quickly, you're going to have a different perspective than I do. Now, the monthly chart on Ethereum, this, again, looks very similar to the Bitcoin. We only have the single peak so far on the RSI, and you see how extended it is into the overbought territory. Go back and look at it monthly here back in 2017 and 18. You'll see we had that initial peak, and then we had a follow-up on a second peak. I can almost guarantee you this is around $300, $350. Zoom back out. Yeah, 396, pretty close. I remember that pretty specifically as being the midpoint in the market, and then we had the huge run-up towards the end of the year. If the market plays similarly to the way it did in the last cycle, I think this is how the Bitcoin chart will look. Very similarly, we'll have this come up, come down, and a huge run-up towards the end of the year. And if Ethereum does the same thing, we have made it there on the first stage of this particular run-up. We are going to slow down, come down even, perhaps go sideways, then we get the huge run towards the end of the year and maybe even the beginning of the next year. Take a look at the daily chart, though. I was really only looking at the monthly because of our last chart there, but we're looking at Bitcoin. Now, the daily chart here looks worse than Bitcoin. There's really not much else to say about that. It just looks worse than Bitcoin. I fully expect it to come down to its 50-day moving average. And if you're not familiar with my indicators, you're just happen to stop by on the live stream, check out the rest of my channel. This is the fancy triple moving average indicator with forecasting and the ghost trails. It's pretty cool. It's one of the more popular indicators on TradingView for moving averages, in my opinion. But yeah, I'm looking to come down to the 50-day moving average, which also clusters around some support. You can very well see a wick below this because we do have that room on the Bollinger Bands as well down here. But I think it could take a couple of days to get down to these levels, but we'll see. Like I said, I'm kind of expecting a week in which we bounce up and hold some of these key moving averages as support. But everything else, momentum is down. It does not look good for the next few days for Ethereum. The weekly chart on Ethereum. This one's very similar to Bitcoin, although you are getting some pretty big bearish divergences forming on a weekly chart versus Bitcoin or versus the dollar. So this right here, where you have the oscillator moving down, but the price moving up, that's a pretty clear bearish divergence. Of course, a bearish divergence is when your price is moving up and the peaks of your indicators are moving down, suggesting that it's more bearish than the price action represents. Now, these are very, very, well, I shouldn't say very, but they are often misleading. I'd say they hit more often than not as far as their accuracy, but in this particular case, it looks pretty bearish on the weekly chart as well. Just because this was such a huge extension on Ethereum. You can also see this kind of peak on the RSI as well. And you had this sort of fake out and double move up on the MACD. It's going to be very hard for Ethereum to continue to move up. And I think this is the perfect segue into looking at the dominance chart. And I think this should be able to show you why. Okay. So this is our Bitcoin dominance chart, and this basically shows us all of the coins' market cap versus Bitcoin's market cap. Pretty straightforward if you understand these things. Now we are comparing Bitcoin here. We are not looking at the altcoin market cap. We are looking at Bitcoin's market cap versus everything else, and that's why it's going down. Give me just a second. I think I can actually fix it to where it shows us the other way around. There we go. So now we are looking at the altcoin cap versus Bitcoin. You can see we've done incredibly well. We've had near all-time highs. And if you've been watching Data Dash, which I do, even though I'm so busy, I still watch his channel because I think he has a very firm understanding of the market and how these things work. And he does a very good job of looking at different charts that play well together. So, for example, Ethereum is starting to look a little bit bearish on its weekly chart. So when we want to compare how Ethereum is going to do compared to Bitcoin, we can, of course, look at the Ethereum and Bitcoin chart. That'll give us an idea. But just in a general way, we're going to look at all altcoins right now because we know that all of the altcoins are up quite a bit considerably right now. You'll see they are reaching their all-time highs. With this sort of movement against the all-time highs, just straight up, it's going to be very hard, if not impossible, to break that momentum, break those all-time highs, and set higher dominance versus Bitcoin that easily. It's not going to be that easy. And this is another reason why I think Bitcoin is going to bounce. Because right now, Bitcoin and altcoins are all losing value versus the dollar. So if everything is losing value versus the dollar, comparatively, their dominance is going to stay the same if they lose at the same rate. But what's really going to hurt the altcoin dominance is when Bitcoin starts bouncing first, and the altcoins are a lot slower. You'll probably see this. I'm almost very confident that this is going to happen, is that the altcoin dominance will drop over the coming weeks as Bitcoin price goes up, and then altcoin dominance will perhaps break the all-time highs out here some point in the future, towards the end of this year, and it'll be kind of crazy. I'm very confident that Bitcoin is going to make back up in its dominance, at least in the short term. Now, I hope this makes sense, because if you've been following TA and you put these two things together, it seems very likely that we are going to have a drop in the altcoin dominance, which means Bitcoin is going to outgain versus the other coins versus the dollar, which at some point means most likely, very, very likely, that Bitcoin is going to bounce significantly and the altcoins are either going to very slowly bounce or continue dropping. Neat. I can't do any Pine script right now. I'm kind of short on time, and I wanted to go over TA because I think today and this week particularly are a very important week for crypto and also for technical analysis, because there is a very clear picture, in my opinion, setting up. And again, not here to give anyone financial advice. I just want to share with you all what I'm looking at, because I am personally making decisions based off of what I'm seeing here. And I don't do this very often. I don't really get so adamant about how these things are going to work, but I feel very confident that this is the way it's going to work. And one of the reasons I'm so confident that altcoin market cap is going to break previous all-time highs is, one, it's very hard for Bitcoin to gain market cap. It has such a high market cap already. You have to dump in way more money to Bitcoin to keep up with all the other altcoins as far as the total market cap. You have to keep in mind there are thousands upon thousands of altcoins that if everybody put $1 into 10 different altcoins and they put $10 into Bitcoin, the Bitcoin dominance would be the same, because you put the same amount of money into all of those different altcoins as you put into the one Bitcoin. So it's just inherently a lot harder for Bitcoin to hold dominance, and I see eventually Bitcoin's going to have a very small amount of dominance, and dominance, as I've stated in my previous videos, is good for identifying trends in the market, but it is not a significant number, whatever the percentage is. So just keep that in mind. And where else was I going with this? Yes, it takes less money to double and triple the market cap on these smaller coins, and it just takes a lot to double and triple Bitcoin, although this really isn't relative like that. It more goes towards my first point, to where it's just inherently hard for one coin to keep up with thousands and thousands as far as the total market cap, particularly when there are more and more serious vetted projects coming into the space that are actually legit and have a long-term potential. So the more legit coins and tokens that come into the space, the harder it is for Bitcoin to maintain its market cap. And I think we are due for another huge run-up on altcoins like we were in the previous cycle. Just look at this. This is the last one. It could very well be very similar to that. I don't know if we'll get that little third wave, which was very big in altcoins that was the middle of 2018. The huge one was the one right after the Bitcoin bubble collapsed. and then it all kind of all fell apart and slowly died over a period of years. Yeah, that's what we're looking at. Let's take a look at Doge. Right, they don't have Coinbase. So this chart's just kind of funny looking. All of that price history. This is Poloniex, so it goes back quite a ways, all the way to beginning of 2014. It's like this is a weekly chart as well, and again, you are getting some serious bearish divergence forming here on this particular chart. If you couldn't just tell based on the euphoric crap going on Twitter and all these other places, you should be able to tell just by looking at the chart. And again, look at this. We got this kind of double peak on that bearish divergence. That's what I look for on a bearish divergence, is a double peak. You see this double peak? I don't really count that because the RSI continued higher on the next one, and it's a very short time frame. You get a double peak spaced out about 15 to 20 candles apart with the bearish divergence, it's usually pretty bad. We could see Doge come all the way down to 27 or 30 cents even, maybe even lower. It's hard to say over the next few weeks, in my opinion. And again, this goes in line with the thinking when we look at the altcoin dominance, is that it can't keep up with Bitcoin. The easiest way for it to really crash versus Bitcoin is to crash versus the dollar while Bitcoin holds value or increases. So just keep that in mind. That's kind of what I'm looking at with Doge here on the weekly. Let's zoom into the daily, see what we got. It actually doesn't look terrible. It looks a lot better than Ethereum, but who's to say? Doge is one of those that's going to be very hard to pin down, just because of all the shady stuff that goes on with Twitter and stuff like that. But look at the chart here. You'll see there was a big bear divergence on the daily chart. So that weekly divergence might have already played out on the daily. Keep that in mind. That's something to look at, and that's why you always zoom in and out of the different time frames. Look at your TA. There is a divergence here, and it might have already played out. So while I expect the weekly chart to continue to look bad, when you get to looking at too big of a picture, it can really mess you up, especially during bull markets, because usually the picture is being drawn on the bull markets on daily 4-hour charts, where the weekly and monthly don't matter quite as much, although they do give you kind of a general idea of whether or not things are way too overbought. All right. Let's see. Another one I want to look at is basic attention token. I haven't even looked at some of these coins that I own in the longest time. This one I'm a little bit worried about, but it looks like it might be ready to bounce. It does have a moving average here as support. Its trend is firmly intact. At worst case, it could come back down to 60 cents at the 200-day. If we get this dip, I would be so excited. I'm probably not going to buy any more basic attention token, but yeah. I sold out of my Matic. I did tweet about this one. I probably sold out too soon, but whatever. I realized profits, and that is an amazing feeling. So I was buying Matic at the lowest of lows, like 15 cents. Okay. I bought a lot of Matic way down there. I don't know. That's Coinbase. It doesn't have the price history. No wonder it doesn't look right. Let me go to Binance. So yeah, this is the Matic price history. I was accumulating around like 1 to 1.5 cents. I knew Eth Layer 2 was going to be a big deal because I knew the network would get congested with DeFi. It was pretty obvious, and if you followed me, I was talking about it for years to come. Before the bull market, I was talking about it for years, and you knew it was coming. It was unavoidable. Eth 2.0 is still a year or more away. It's absolutely unavoidable. that we were going to have a layer 2 situation, and Matic was severely underpriced and very bullish at that time. But I took profits around 90 cents, I believe. So yeah, it nearly doubled. Yeah, it did double since then, and I'm okay with that. Not a big deal. I think the price is going to come back down at some point. I am more worried about more blue chip or big ones like Link, and it still looks fine. Just look at the slope on its trend. It is the most gradual incline on this slope compared to some of the other things that we're seeing in the market. This is probably one of the more healthy growths in the market we've seen during the bull cycle. Definitely a very good project. Take another look. And since most of these projects are all kind of doing the same thing because it was an alt season, I'm not going to dig into them too much. But what was the other one that I have? Uni. And this one's very similar also, although I am kind of worried about it breaking this 100-day moving average we have here. It is a bit concerning, but there is a lot of support within this particular area. So I'm fairly confident that it can rebound. Take a look at XLM, stellar. Wow. Stellar, look at this. This one's holding up very well versus the rest of the market. And doing very good in general. This could be one of the plays where money moves into as it's moving out of the other crappy coins. So say Doge starts to crash, people who were in that could move to Stellar. Let me pull up my phone, see what else I got on here. Okay, I want to look at BNB because I get a bunch of that in referrals. Well, not a bunch, but I get some of it in referrals, and I've just kind of accumulated. Yeah, this one's a little concerning. I think BNB definitely outpaced the market. It was one of the first big coins to do much of anything in this particular market. Oh, hold on, I gotta take. All right, I had to remove some. Okay, so yeah, BNB definitely extended and got past the market way ahead of everything else. This was back in February. It got up crazy highs. I never thought we would see $330 so quickly. But anyway, it can be a little concerning. I think we could come back down to $400 or so on BNB, and if we're lucky, it'll come back down to the 200-day. We'll get to buy that dip. BNB is solid. These exchange coins can be very good. Speaking of exchange coins, I'll look at Pro. This one is struggling a little bit lately. I'm a little worried for it. I gotta say, just looking at the chart, you can see the price line, red line going all the way across. You can see it's broke below this former previous level, which it dropped. And it's not as important the second time it does that, because we do have a key moving average below it. I would keep an eye out. If you're following Crow, keep an eye out for that 200-day moving average, which is around 12.5 cents. I think you'll be able to buy some Crow at 12.5 cents later this. I do want to take a look at this one versus the weekly. And this is actually a very similar chart to Bitcoin. It's closed very similarly within that margin of error versus the mid Bollinger Band, and it is falling beneath it. Momentum is still kind of downward, but again, you've still got those key moving averages on the daily chart that could help. Let's go back out to the daily. See if I can't pull up some more coins here. And I am not about to look at Shiba or anything else like that. Like I'm glad if people made money on that, but that is not it. That's not how you make money consistently with crypto, in my opinion. I'd rather make 4% 1,000 times than make 1,000% once and then lose it the next time. Was something crazy like that. All right, so KNC, this is another one I'd kind of grabbed a little bit of as a safer play, I believe. And it's been doing very well. KNC, I've been very happy with it where I got it. I want to look at it on the weekly chart because the weekly chart is the whole reason that I purchased it when I did. Daily chart, I do think it'll come back down to 200. I don't think there's much support, although there's a cluster here around 2.25 where it might hang, but it very likely coming down to that 200. Let's take a look at it on the weekly. I keep doing that. I keep wanting to symbol. Although I don't know. It does have a little bit of support here on the weekly right where we're at. Might not be too bad. I don't really have any other coins that much of. Oh, let's look at Litecoin because I did talk about it in a video recently. Okay, Litecoin. Look at that. It hasn't even broken its all-time highs from 2017, like every other coin on the market. This is perhaps one of the last big solid plays left, in my opinion. And you're getting a bull or bearish divergence. Excuse me. You're getting that bearish divergence on it now. Price could come back down. It has not even really started its bull run. So wild to think. It's a solid coin. You know, I think there's like what? It was 4 times the size, I think, of Bitcoin. So there's like 84 million coins total. Slightly faster transaction times. It really doesn't do anything too special other than just be a slightly faster Bitcoin. But you can kind of see there's a nice little pattern forming here on the chart. Get the brush. Look at this. Got that W, which even then you could redraw that into a cup handle, even potentially. So I'm still really interested in Litecoin. I've got some of it hanging around from earlier in the cycle where I got some. There we go. Just hanging on to some of it from earlier in the cycle that I got that I still think it's going to beat those values. And take a look at it on the daily. Going to get a little bit of support here, but could come down to its 100-day. And yeah, I do watch these moving averages quite a bit. And I'll repeat this, I know I've said this a bunch to the people who've watched my videos in the past, is that when you get this kind of cluster, this area to where you get a moving average and previous potential support. So you had price action back here, which was former resistance in this spot and in this spot, which held as support here in this kind of area and also here. Look at this moving average. It's pretty much right on those values. This is a key area to watch. Price really hasn't retested that since back here. It might not come down there because it has already retested. But, I mean, if you're looking for a target for it to go any lower, it would be here. But it's not that big of a difference. You're only talking about $30 or so on Litecoin right now. It's not a huge deal. I'm sure that's a pretty big percentage drop, but I'm not too worried about that particular amount. Let's see what it is. Use the wrong tool. I need to use measure. That's only like 10% down from here. And we're talking about a coin that could go 2 to 3x from its tops based on its history. Just something I'm keeping an eye on. But okay, I think that's going to be it for this video. I've went on for a while. Hopefully those of you all who were able to come by enjoyed it. I know it's been a while since I've been able to do TA. I've really enjoyed getting to it finally again. Hopefully I can do some more videos like this, but there is a lot going on in my life. Coaching soccer for my kids. I've got classes that I'm teaching at college. I've got a full-time job. I've got a couple side gigs on top of all that. Got a lot going on, so be patient if you're looking for content, and I try to make it always the utmost quality when I do post an important tweet or post an important video about TA. I try to make sure it's pretty important and worth your time. But that's gonna be it for now. I appreciate everyone for stopping by. Thanks. I hope you all have a great day. See ya.